Netflix reported fiscal year 2022 fourth quarter earnings results on January 19. That had the stock jumping after the results were announced. So let's go through the earnings report and see what had investors excited about Netflix's fourth quarter. So I've highlighted a few things and let's get right into it. Um, Firstly, Netflix successfully launched the new lower priced ad supported plan in November, and they're pleased with the early results with much more still to do. For many years, Netflix resisted the pushing of investors to launch an ad supported version of its service. Others had been successfully offering customers an ad supported service, namely Disney's Hulu had a lower priced ad supported tier that was doing really well. So investors were hoping Netflix would do it, but they were resisting. So this is good news that they launched. It's going well, and you can expect more progress on this front going forward. Secondly, they delivered on the high end of their operating profit margin target for the full year in 2022, and we expect to increase our operating margin in 2023 versus 2022. This is a significant difference between Netflix and other streaming content providers is that Netflix is profitable. It's generating positive earnings. Disney, I mentioned earlier with Hulu supported, they're losing a lot of money in their streaming segment. So are the others. Netflix has already reached a scale where it's delivering profits on the bottom line. In fact, in 2023, they said they're going to expect to generate at least 3 billion in free cash flow after generating 1.6 billion in 2022. So not only are they profitable, but they're generating an increasing amount of free cash flow. This is really good news for Netflix stock investors. I can see why the stock reacted to this news. However, in my opinion, what was really bad news for Netflix stock investors is this announcement that Reed Hastings is stepping down as co-CEO, staying on as executive chairman. Reed Hastings, of course, is the founder and pioneer of this company. He's been with Netflix for decades, and he's largely responsible for the growth of this company, the growth of the streaming content industry. So I would not be happy if I was a Netflix stock investor if knowing that Reed Hastings is stepping down. So this is a neat little chart that Netflix usually provides with every earnings update. And the key thing to look at here is I'm going to grab your attention here in the middle where it provides its global streaming paid memberships. It added 7.6 million global net additions in the quarter. That was millions higher than what it was forecasting and what Wall Street was expecting. This is the primary reason why the stock jumped, although the company is trying to get investor attention away from just looking at subscriber growth. Still, it seems that this is what Wall Street is paying most attention to is subscriber growth. Netflix now has 230.75 global streaming subscribers, and that's a large enough scale for the company to reach profitability on the bottom line, like they mentioned earlier. For the first quarter of 2023, the company is forecasting a return to sequential revenue growth of they're expecting to deliver 8.172 billion of revenue in the first quarter of 2023. If you look back here, Netflix had two consecutive quarters of sequential declines in revenue. From Q2 to Q3, revenue fell from 7.97 billion to 7.92 billion, and then from Q3 to Q4, it fell from 7.92 billion to 7.85 billion. So whenever you have this kind of trend, it raises the risk in investors' eyes that this is going to be an ongoing trend downward. So the fact that Netflix is forecasting a turnaround alleviated some of those risks. And a lot of times a stock price can go up just because a risk is reduced, right? A stock price can increase just by reducing risk. That's something that investors need to keep in mind. If risk is lowered, then valuation could increase, because in a lot of financial models that Wall Street analysts use, the denominator in the models, it incorporates risk. And so if risk is reduced, then that denominator figure is reduced, and then that causes an increase in valuation forecasts and in price targets on Wall Street, which then has a positive impact on the whole stock price, right? So that's something to keep in mind. And so overall, I would say the actual results in Netflix's quarter was really, really good. I would give them an A plus in this quarter because of the cash flow forecast, because of the 1.6 billion in free cash flow for the year, because of the better than expected operating profit margin, and of course the millions of more streaming subscribers added than was expected. However, that is all mitigated by the fact that Reed Hastings is stepping down. That's a big, big downside for me. If I'm looking at investing in Netflix stock, I would not be happy with the Reed Hastings announcement of that he is stepping down. So that kind of neutralizes the positive effects of the fundamental performance of the company in this quarter. All right, so that's all I've got for this fourth quarter 2022 Netflix earnings review. Thanks for watching, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.